What's up everybody? Welcome to the Stocks channel. My name is Corey, and in this weekend update we'll take a weekly and monthly look at the stock market, and we'll look at the S&P 500, NASDAQ 100, Dow Jones, the Russell 2000, the VIX, and Bitcoin. First up, let's take a look at the S&P 500 SPX index. So let's crack open this chart and see what's going on in the stock market today. Alright, first up we'll take a weekly look at the SPX, and remember each candlestick on this chart does represent one entire week's worth of price action. So we can see that the S&P 500 finally had a bullish week after that 2 weeks of going absolutely nowhere, just trading sideways. Remember, when a market goes sideways, it's building up energy and getting ready for a big move. And right now it does look like that energy is getting released to the upside. We see on the weekly chart we're not even at the upper Bollinger Band just yet, and our price target is still up here at 43.06. Remember that our previous price target was 41.52, and we did retest that level as support for 2 of the last 3 weeks. So that's a positive indication. When a previous price target bounces as support and we see the price continue to go higher, it does give us an extra degree of confidence that we're getting to our next price target. So from this week's close to our price target, we still do have about 1.6% to go before we get there. Now that's not a ton of upside, and that does increase the risk that we could see a stock market correction after we get to any of these price targets. So do remember, the higher we go, the more risk there is, but we haven't yet quite got to that target. And there's no reason to try to call a top or predict when the next stock market correction is going to be. That's why we do our daily stock market analysis, and that's why we wait for a confirmation or a rollover in the market before we get bearish. Right now, the price action is over the 5 EMA, and we still have the really strong bull trend. We can also see on our bear bull survey that we're only at 44% bulls, which is only up about 2% from the previous week. Remember, when we were back over 50%, we wanted to be cautious while everybody else was greedy, and we did see the stock market cooling off after that. Right now, we're seeing a reduction in the bulls the higher we go, which is actually a bullish indication because we don't want to see too much greed. We want people to get skeptical and we want people to get bearish the higher the market goes, and that will actually add fuel to the fire to allow the market to go even higher. So remember, we need to watch the survey closely, and as we see greed, we do need to get more defensive. So this is definitely on the side of more greed than it is caution, but we still do see over 50% of the people that are either neutral or bearish. So going back to the SPX, let's switch this over to a monthly chart. And we can see on the monthly chart, we're not even at the upper Bollinger Band just yet. The upper Bollinger Band is right around 42.55, and we're not trading at that level just yet. Note that in the previous months, we usually get above the upper Bollinger Band before we see that pullback or that retracement. So it could be possible we get to that price target in the month of May before we see the pullback or before we see a correction. So right now, we do need to note that the Bollinger Bands are allowing the price action to go higher without much resistance or much downside risk. Remember, as we get outside the upper Bollinger Band, especially on the monthly chart, that increases the risk that we could see that pullback and that retracement. So on the monthly chart, we're still trading well above the 5 EMA, and we can still see a very strong bull trend. Jumping over to the NASDAQ 100 NDX index, we're looking at the weekly chart, and we can see the NDX did close just barely below the 5 EMA on the weekly chart. We could see that we've had 3 red weeks in a row, and going back in time, we can see that usually after we get 3 weeks of red, we usually do see a bounce in the market. We see the NDX coming down for 3 weeks, and then we get a bounce, and then we come down for 3 weeks, and we get a bounce. So as we can see here, we've had 3 weeks of weakness in the NDX, and it does indicate that we could see a bounce from here. We still do see a sector rotation with technology and other growth stocks getting sold off, while a lot of money is going into value and reopening and inflationary trades. So right now, the NDX does look the weakest, especially when comparing to the S&P 500 and the Dow Jones going to all-time highs. But remember, sector rotations usually come to an end, and then money comes back into these sectors. So on the NASDAQ 100, we still have a bull trend, and the price action is still very close to that 5 EMA. There's a lot of room to go to the upside of the Bollinger Band, and our price target is up here at 14,488. So there's no reason to panic just yet on the NDX, and we still see critical support holding up. We've already retested the 20 simple moving average on the weekly chart multiple times, and that level did hold up as support, and now it looks like we're getting ready to head higher. Jumping over to the monthly chart, we can still see we're above the 5 EMA for the month of May, and the upper Bollinger Band is well above our price target, which means we won't be getting any resistance from the upper Bollinger Band. We still see we're in a bull trend, and we still see plenty of upside potential for the NASDAQ 100. Next up is the Dow Jones weekly chart, and we see the Dow Jones had a very bullish week, well above the 5 EMA and still holding on to that strong bull trend. On the weekly chart, there's still more room to the upper Bollinger Band, and those Bollinger Bands will continue to expand going into next week. We also see the Dow Jones did have 2 weeks of weakness, and now we're starting to see a bounce, which means that energy is getting released to the upside for the Dow Jones. On the monthly chart of the Dow Jones, we can see that we are trading at the top of the Bollinger Band. So this does limit the upside potential in the Dow Jones, and if the Dow Jones does continue to go higher, we could see a pullback or we could see a minor correction in the Dow. So right now we can see the Dow getting a little more extended than we see on the S&P 500 and especially on the NASDAQ 100, which still has a lot of upside to go. On the Russell 2000 weekly chart, we see the Russell 2000 still going sideways and still building up a lot of energy. Remember, when a market goes sideways, it's called consolidation and it could lead to a monster move in either direction. On the Russell 2000, we've tested that 20 simple moving average on the weekly chart multiple times and that level is acting as support. We see the price action above the 5 EMA and we're still holding up to a bullish trend in the Russell. There's plenty of room for the upper Bollinger Band and these Bollinger Bands are getting a little tight the longer the Russell 2000 goes sideways. Switching over to a monthly chart, we still see plenty of upside in the Russell 2000 and we still see a bullish trend. So the Russell 2000 has been in a consolidation, but also remember why. The Russell 2000 got way too far extended in the previous months, especially going back in March, and it was going through a sideways correction through time as it was consolidating some of those newfound gains. So you can see it very clearly on the Russell 2000 that it's been going sideways for multiple weeks in a row right now, and that does indicate we could be seeing a monster move in the Russell in the very near future. On the VIX weekly chart, we see the VIX heading back lower after we did get a couple of weeks of green. Now the VIX was getting very oversold and very low, and we do see it starting to bounce, but we're still trading below that resistance level at 18.2. Remember, to signal a deeper stock market correction, we would need to see the VIX getting back into the 20s, and right now the VIX is still trading way down here at 16.7. So the VIX is not sending any indications of a deeper stock market correction at this time, and if anything, the VIX is hinting at new all-time highs coming in the very near future. Jumping over to the Bitcoin weekly chart, we can still see Bitcoin trading over top of the 5 EMA on the weekly chart and still holding on to the bullish trend. You could see that Bitcoin did fall out of the wedge to the downside, and now Bitcoin is getting right back to the mean of that wedge right around $58,000. If Bitcoin can't break above the mean of this wedge and can't get back over 60,000, that could mean that this is a strong resistance level for Bitcoin and it could be going back into a downward trend on the daily chart. But on the weekly chart, there's no reason to get bearish on Bitcoin just yet because it is holding up on the bullish trend and the price action is holding above all the moving averages. So this does favor the increased probability that Bitcoin could be going to all-time highs. Remember, Bitcoin needs to break back above 61,000 to possibly see the next price targets at 67,000 and 75,000. Jumping over to the monthly chart on Bitcoin, we can still see Bitcoin is trading right on top of that upper Bollinger Band. That does limit the potential upside, but we did see Bitcoin getting way too far extended in the previous couple of months, and it did pay for that, and that's why Bitcoin is struggling to go higher. But right now, remember, those Bollinger Bands will expand, and we could see a couple of months or possibly even 3 months of weakness before we see Bitcoin getting back into that bullish strength and heading much higher. So if we do see more consolidation in the month of May, that could mean the next bull run in Bitcoin will happen in June, or we could continue to see weakness in Bitcoin until these Bollinger Bands continue to expand, and we may not see strength coming back to Bitcoin until July or August. So right now, just know that Bitcoin is very close to the upper Bollinger Band on the monthly chart, and that is why Bitcoin is struggling so hard to continue to go higher. So going back to the SPX weekly chart, we can still see upside potential in the markets, and I do think that the SPX is going to see my price target at 4306 in the very near future. Remember, that's just under 2% away, which is in the realm of possibilities coming into next week. All we need to do is continue to see strong earnings reports, and remember, as long as those big money players are not selling, the market is more likely going to continue to go higher. We see these low volume melt-ups in the market, and we just don't see any of those big money players selling their positions just yet. Remember, you want to follow the smart money and you want to follow the trend. Right now, the trend in this market is still bullish, and we still have bullish price action with bullish trending. So if you're a bear in this market, you're just guessing. Remember, there's no reason to try to be a hero and trying to call a top in a bull market. It's very possible this market continues to run higher, and it's even possible that it blows right through my price target at 4306 and continues to go higher. That's why we need to remain flexible, and we always need to stay objective in this market and continue to follow the price action in the trending. So do note that there's plenty of upside potential left in this market, and we need to play it day by day and continue to watch the price action very closely. Also, remember that I have the Stocks Channel Discord where I give you intraday updates and analysis to always help you stay on the right side of this market, and I'm bringing new trade ideas to you weekly to help you absolutely crush the market. If you're interested in joining the Stocks Channel Discord trading community, you can find out how to join by clicking on the link in the description of the video. So I hope you're all enjoying your weekend. Happy Mother's Day out there for all of you moms, and as always, I will see you in the next episode.